The US dollar is coming down alongside bond yields ahead of the FOMC meeting tomorrow. And in this video, we'll be preparing for that, but we'll also be taking a look at some key market players like the euro that's jumping today and the pound that's also jumping strong and the dollar CAD after Canadian CPI numbers came out this morning. We'll talk gold and maybe even a little bit of Bitcoin, which is really on the move right now. Let's jump into everything in this video starting right now. So today we have stocks lower as the S&P 500, the Dow, and the NASDAQ are all trending lower here on the hourly chart, but so is the US dollar. And this is really a little bit concerning as we approach the FOMC meeting minutes tomorrow at 2 p.m. US Eastern time. That will be very volatile market news, so keep an eye on that, and we will be live streaming that event as well. Amidst this dollar weakness, we do have the euro and the pound making strong moves higher here this morning. And again, it's really coming down to yields falling on the 10-year. We'll take a look at that in just a moment. Gold is flying, which is also for the exact same reason. That dollar weakness on yields dropping is giving gold a nice boost. We're trading at $2,029 an ounce at the time of recording this, and oil is staying strong. So here's a look at the US government bond, the 2-year. You can see it's trending lower here this morning. And a lot of traders, they don't realize just how important the bond market truly is, especially if you trade gold or dollar denominated currency pairs. The bond yields that are being offered are very, very important. So this drop ahead of the meeting minutes is really sinking the dollar right now, which is giving way to a stronger gold, silver market, etc., as well as other currencies taking the lead today. And we can really see this being reflected on the daily chart of the US dollar index. You can see we are sitting at a key level of support, but we've been sinking lower here for 5 days now. 1, 2, 3, 4, 5 days in a row of selling on the US dollar index. Now, again, we have to be careful with this because you can't get overly bearish ahead of meeting minutes because we don't know what's going to be said or what is going to be released in that document. That document that gets released could tell us that the Fed is still very much not impressed with where inflation is at, and we could see the dollar rally tomorrow, but we don't know. And that's why I think you have to kind of hold off your judgment too far today. This could just be very well a pullback to support around the 104 level. We are trading there at this time of recording, and I'll give you my game plan on this. If we do see this level significantly break lower, then I would probably go ahead and stop out of my positions, no longer be dollar bullish in the short term. Now, again, we still have strong economic data. We saw very strong jobs data. We saw hot inflationary numbers. So I do like the case for a continued bullish run in the dollar index, but I do have to be prudent with my risk management and say, if this level breaks, then I'll go ahead and short term close out and wait for a better opportunity to trade this on the long side. So here's an update on the Euro USD. So we did break out of this downward channel, which I trimmed my stop loss to be a bit tighter. So I did take a loss on this one, but it was smaller than usual. And I'm glad that I did that. You can see here is where we sort of broke out of that downward structure. And for now, this is keeping me on the sidelines when it comes to Euro dollar, though I do still have a bearish outlook on this pair. And one of the primary reasons for that is because if you take a look at Europe versus the US in terms of inflation, we do see inflation overall trending lower in both places, but notice the change that took place towards the end of 2023. Inflation in Europe was higher and hotter than the US, and the US was coming down nicely, and during that time the euro dollar was very, very strong to the upside. But then we've actually seen the trend reverse a little bit with strong economic data. You can actually see the blue, which is US inflation, has actually kind of gone sideways while Europe's has continued to go lower. Now, this divergence can actually be a very interesting thing to watch in the currency market because this could lead to the central banks doing different things. If inflation is continuing to come down in Europe, they may cut their interest rates, which could weaken the euro. And if the US holds their interest rates steady for longer, the US dollar could look a little bit more neutral. And when comparing those two biases, we have more of a bearish outlook for the Euro USD. So this is primarily one of the big reasons why, keeping it relatively simple on the fundamental side as well, I'm pretty bearish on the Euro USD overall. So I'm just waiting for a signal to get back in on the technicals. I should also mention that ahead of FOMC meeting minutes tomorrow, we will be very active this week in terms of trading inside of our signals group. And if you're not already inside of the VIP room, then I want to make sure that you get a chance to do so for a discount. So click the link, it's at the top of the description. If you direct message us and ask to join the VIP group, we'll give you some nice discounts on the memberships that we offer ahead of FOMC meeting minutes. Again, all you got to do, send a DM using the very first link in the description and let them know you'd like to join the Signals group and get in on the chat rooms and everything, and we'll get that set up for you. And although we don't talk about it too often, Bitcoin is making an appearance on the channel. Bitcoin is flying high at 52,000, and I do actually have a position on this. Check this out. So if I go to IBIT, this is an ETF that I bought, which tracks Bitcoin. It's a new ETF. It's very, very new. They just dropped ETFs, in the last few months. But I bought IBIT as a way to play Bitcoin. Overall, it's trending up very nicely, and I do have a position on this one. This is sort of a risk, well, I consider it just to be straight up a risk asset. It's not something necessarily that I massively believe in or not, but I'm trading it as a risk asset, meaning if I think that the markets are going to be optimistic, I'm probably going to be more long Bitcoin. And if I think the markets are going to be pessimistic, I might be on the short side of Bitcoin. But right now, markets are running hot and we've got a nice trade. This was shared inside of the VIP room as well. And here's a quick look at CAD yen, which came down hard this morning because we did get CAD CPI, which really was lower than expected. And remember, when we're talking about central banks, cooling inflation may be something that gets them to cut interest rates sooner. So the Canadian dollar is looking primed for that with their inflationary numbers that came out today. Let's check those out. So when we take a look at inflation out of Canada, you can pretty much see across the board, it was a really cool reading in terms of inflationary numbers. Cool as opposed to a hot reading, which would be hotter than expected, higher than expected. A cool reading is lower prints than expected. We were, again, pretty surprised here in terms of what we saw, all pointing towards cooling inflation in Canada, which could indicate that interest rate cuts are coming sooner, which could weaken the Canadian dollar against other currencies. Here's a quick look at retail positioning across the board. What we can see is that indices, they're still very bearish on average. The retail trader is mostly betting against them, but we can also isolate this real quick just to major currency pairs for a moment. What we can see is that when looking at major currencies, you have things like dollar yen. Retail traders are very short on this one, which is giving us a contrarian bullish signal. Euro, pound, Kiwi, and dollar CAD are mixed, while Australian dollar retail traders are very much long on this one overall, giving us a contrarian sell signal, and same thing with dollar Swiss. Here's our current top signals from the Edge Finder in terms of the output algorithm, the top setups page. This basically looks at lots of different market data and generates bullish and bearish readings in the market. We're getting bullish readings on things like pound pairs, pound yen, pound Aussie, pound CAD, pound Swiss, pound dollar, and then also oil, the DAX, the Kiwi, Kiwi CAD, Kiwi yen. There's your bullish readings overall. On the flip side, we're getting bearish readings for Aussie, Kiwi, and Euro Pound. And by the way, you can see all of the contributing factors on the right-hand side of the screen. So all of the different categories looking at the commitment of traders data. So we're tracking institutional money, we're tracking retail money, we're looking at seasonal trends, we're looking at momentum in the markets, economic stats, inflation, labor statistics, and interest rates, all being factored into the algorithm and pointing towards a bullish or bearish reading based on those stats. We have the latest data on AAII and Investor Sentiment Survey. What is this? Well, it's a good stock market sentiment indicator. And what we can see here is that things have become a lot more balanced in recent times. There's 26.8% of survey respondents that said they are bearish on the stock market, 42.2% is bullish, and 31.1% neutral. And this is the most bearish that we've actually seen in some time. Now, again, still less bullish, less bearish than bullish, but that generally is the case when it comes to stock markets. People are generally a little bit more bullish. So this reading is kind of an exception to the recent norm. So perhaps there's a little bit more bearishness creeping into the stock market at this time. How can you use this? Well, if you're an index trader, this indicator is for you. I use it all the time because if I know people are getting too bearish or too bullish, it can be a contrarian indicator. Very similar to retail sentiment, by the way. Also, I should mention that if you'd like to try out this software for 30 days, there will be a link down below in the description so that you can get some more information. The Edge Finder is a wonderful tool to bring data into your trading. And these days, I really think that if you're not, being a systematic trader using data, using market data, you're going to get swamped by the guys at the hedge funds who are using a ton of it to make informed decisions. So get yourself some data, get a 30-day trial, click the link down below in the description and fill out that application. Tomorrow we have meeting minutes at 2 p.m. And like I said, we will be live streaming the event. So make sure to tune in. If you haven't already, make sure to subscribe to the channel, hit the notification bell so that when we go live, you get a notification. When looking at the FedWatch tool, we can see that there is currently about a 65% chance that in the May meeting, we will get a interest rate hold. And this is interesting because a little bit ago, people thought interest rate cuts were coming in March. They thought, May was pretty certain. And now it's really changed. We've seen that, drastically adjust. You take a look at June, it's a little bit more likely that we do see rate cuts. Again, 55% chance that we do see our first rate cut at that time, which again, if you're somebody who's trading gold or you trade the US dollar, this is something very important to keep an eye on. And all this is, the FedWatch tool is just taking a look at interest rate yields on treasury bonds. So something to keep an eye on. And I mentioned it earlier, but if you'd like to join us ahead of the FOMC meeting minutes, we will be trading it together live inside of our VIP Discord channel. To get information, just shoot us a DM using the first link in the description. Hope this video was helpful to you and helped you to get ready for the rest of this trading week. Have a great day, trade safe, we'll see you next time. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, Eightcap. Eightcap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your Eightcap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out Eightcap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.